Hi, this is Bruce, and welcome to Turnaround Stock Investing, a community of value investors devoted to helping you find, buy, and manage a portfolio of turnaround stocks. In this screencast, I want to tell you why I created Turnaround Stock Investing and why you should join. The overall goal of our site is to help you locate out of favor and distressed turnaround stocks that will rise 100 to 500% over a 1 to 3 year time frame. The slide in front of you is my 5-step process for investing in turnaround stocks. Step 1, search for stocks that are trading at least 60% below their 3-year highs. 2, perform basic technical analysis to see if the share price is forming a technical base or bottom. Step 3, if a base is being formed, you want to perform basic financial analysis to determine if the company will survive and what the future earnings potential are. Step 4, determine if management's interests are aligned with outside shareholders. And finally, manage your portfolio of turnaround stocks using the stop and re-entry method. However, the key difference between turnaround stock investing and other value investing sites is our philosophy on how to manage a portfolio. The key to how you succeed as a turnaround stock investor is closely linked to how you manage your emotions when the stocks you buy begin to decline. It's not your education or experience that determines your returns. It's both your ability to buy when everyone around you is panicked, and secondly, cutting your losses when the stock price action indicates that a corporate turnaround may not be working. The majority of value investors pride themselves on buying more shares as the price goes lower and lower. We do not subscribe to this theory. In front of you is a quote from Paul Tudor Jones that I think highlights our thought process. These days, there are many more deep intellectuals in the business, and that, coupled with the explosion of information on the internet, creates the illusion that there is an explanation for everything, and that the primary task is simply to find that explanation. As a result, technical analysis is at the bottom of the study list for many of the younger generation, particularly since the skill often requires them to close their eyes and trust the price action. The pain of gain is just too overwhelming for all of us to bear. After investing in turnaround stocks for decades, I concur with this statement wholeheartedly. The principal enemy to great returns is not the lack of knowledge or poor research. It's continuing to buy stocks that are breaking significant technical patterns when the fundamental research suggests that this should not be happening. Over the past 3 decades, I've witnessed numerous hedge funds and private investors that have left the game of investing because a handful of value stocks crushed them when they doubled and tripled down on an investment that never turned around. They continually believed the markets were wrong and they were right. It's time for value investors to accept that in many circumstances there is wisdom in the markets. This wisdom is generated through watching the price action of a stock. The goal of turnaround stock investing is to help you become psychologically prepared for taking losses, to separate your ego from your portfolio. I'm sure if you look at your portfolio over the years, you have noticed it is always just a handful of stocks that have hurt your results. Had you cut your losses, your returns would be dramatically better. That is the essence of turnaround stock investing. Yes, you will learn best practices for how to read financial statements and perform technical analysis, and learn the steps of how great management teams turn around companies. But once again, the most important point is to realize that while research is important, it's not as important as portfolio management. If research were the key, every MBA from Harvard would be rich, but they are not. Every value hedge fund would outperform the market every year, but they do not. The key is to realize that in any portfolio of turnaround stocks, 20% of your stocks will account for 80% of your gains. This is a hard fact for value investors to accept, as they have been trained to believe that great research will give them their edge for superior returns. However, what value investors fail to appreciate is that investing in a value stock is buying a company that is underperforming, typically due to declining margins and sales. Accurately determining when the downturn will be over or when management will be able to improve margins or fix the balance sheet are all unknowns and will typically take longer than most investors can imagine. As a result, what initially appears to be a great value may turn into a value trap as cash flows decline and balance sheets deteriorate. How investors deal with the first sign of being in a value trap is critical and the essence of turnaround stock investing. We believe the technicals will alert you to being in a value trap faster than the fundamentals. Being early can be devastating to a portfolio. Our goal at turnaround stock investing is to make sure that we limit losses when we are early or wrong. This is unlike any other value investing site around. You are now looking at a picture of Howard Marks, the leader of Oaktree Capital. He is considered one of the country's greatest distressed investors. His firm is currently managing in excess of $70 billion and has access to the greatest businessmen in the world, and I'm sure the finest sources of information. Yet despite all of these resources, Oaktree and Howard Marks are sitting on an $800 million loss from a $900 million investment in Star Bulk Carriers. In 2013 and 2014, Oaktree invested $600 million into Star Bulk Carriers. At the time, it appeared to be a wise investment, as dry bulk vessels were historically very cheap. However, despite all the research and knowledge Oaktree had, they were early. In 2015, China began to slow its imports of coal, which caused dry bulk rates to decline significantly. Realizing that Star Bulk would need more capital, the company commenced a common stock offering at $5 a share. Not only did Oaktree buy 50% of the offering, but I also purchased shares believing that dry bulk vessels and rates were close to a bottom. I also believed that Star Bulk's share price was commencing a double bottom, as you can see here, as this chart indicates. I had done a significant amount of research, speaking to dry bulk ship owners and studying the supply-demand characteristics for the dry bulk market. However, both Oaktree and I were early, as rates continued to decline significantly, causing the share price to break its base and fall. Despite all the research and the belief that Star Bulk may be bottoming with a double bottom formation, the break of the base told us we may be early and that caution was warranted instead of doubling down. As the stock price fell, our methodology told us that we may want to reduce the position size significantly or sell out completely and watch and wait for re-entry if we still believed in the long-term story. The broken base was sending a signal that despite a solid balance sheet at the time, that declining rates could damage this strong balance sheet as negative cash flows could overwhelm the balance sheet. Conventional value investors would just continue to buy more shares at the stock decline. The lesson is that if Howard Marks can get it wrong on such a large investment with all his resources, what makes us think that we are any different? Our portfolio management system, based on the 80-20 principles, allows us to stop out of a Star Bulk investment numerous times without damage. In fact, in a portfolio of 10 stocks, we can stop out 7 times and still have significant returns from 3 stocks that turn into true turnaround stock winners. As a member of the turnaround stock investing community, you will develop the skills necessary to become a successful turnaround stock investor. You will develop a strong procedural memory for the foundations of turnaround stock investing. This includes gaining competence to recognize stocks in a bottoming process, learning how to become proficient studying financial statements and stock charts in a simple and straightforward way, learning how to great CEOs fix companies so you can recognize management teams that are implementing similar strategies raising your odds of success. And finally, practice employing the stop and re-enter strategy on every one of your stocks. The goal of turnaround stock investing is to help you achieve your dreams of generating large returns from buying out of favor and depressed stocks while minimizing the risks of large capital losses. I hope this screencast encourages you to watch more of our videos and consider joining our website. I also encourage you to send an email to info@turnaroundstockinvesting.com, and I'm happy to reach out to every one of you. Thank you.